So last week, Reklaim issued a press release. In my view, it's good news, and today we'll go through it. So, Reklaim strengthens balance sheet with 18% debt reduction. Reklaim, the platform that empowers consumers to access, control, and monetize their personal data, announces an 18% reduction in overall debt, fully funded by existing cash flow. This is a very important detail, okay? But anyway, this reduction highlights Reklaim's disciplined financial management and commitment to shareholder value. Separate from the debt reduction, Reklaim has completed a non-brokered private placement of convertible debenture units totaling $465,000 to accredited investors, replacing an existing outstanding facility. Each debenture unit consists of one senior secured convertible debenture and one half of a warrant. This transaction does not create new debt, but refinances and replaces existing debenture holders. That's very important too. The debentures accrue interests at a rate of 12% per annum, are payable semi-annually, and mature in 2027. The company reserves the right to repay the debentures early. Each warrant entitles the holder to purchase one common share at an exercise price of 14 cents Canadian per share for 24 months from the date of the issue. Reklaim retains a forced conversion right should the shares trade at a VWAP of 20 cents Canadian or higher on the TSX Venture for 10 consecutive trading days. A total of 2.2 million warrants were issued under the offering. No commissions or fees are payable by the company in connection with the offering. The offering remains subject to final approval by the TSX Venture, and all securities issued under the offering are subject to a hold period of 4 months plus 1 day in accordance with applicable securities laws. Now, about this additional information here, the company has also agreed to issue 16.3 thousand common shares at a price of 11 cents Canadian per share to certain platform users in Canada who participated in Reklaim's beta testing for a new product feature. The total value of the settlement is 1,800 Canadian. So what do I take from this? What do I take from this press release? Well, as I've said, I think this is good news. After all, the company reduced its debt in the first place, right? Which is something very positive. And secondly, it did so with the cash it generated from its own operations, which is also a very positive sign. They've also refinanced part of their debt. I don't know which were the previous conditions, but I believe this refinancing was beneficial for the company. Otherwise, I don't think they would have done it. On the other hand, the company issued convertible debentures and warrants, bringing in the risk of dilution, which of course I don't like. But as I've said before on my other videos about Reklaim, if you don't like dilution, you shouldn't be invested in this company because it may use dilution to pay off its debt. But honestly, I don't know exactly what to think about the risk of dilution in this press release. To me, the first thing that comes to my mind is that if I don't like dilution, Reklaim CEO probably likes it even less since he owns a big chunk of this company. So the way I think is this: well, if he's okay with the risk of dilution, then I don't think I should be too worried about it. Anyway, I even tried to contact the company to better understand this press release and what it means. So let's see if they respond, and let's wait to see what happens too, right? Anyway, that's it for today, and see you next time.